Hi, this is Randy Finney with Right Side of the Chart, and this is an early session market update for Wednesday, August 28th, 2019. I didn't do a video, end-of-day video, because there really wasn't much or anything new to report since that midday update that I did yesterday. However, now there's some things that I haven't pointed out recently that I'd like to cover, and let's dive into the charts here. So first of all, let me say this. Start out with the futures here. I'm just not seeing a lot. I try not to, squeeze water from a rock, blood from a stone, whatever. Meaning, if I don't see anything compelling in the charts, anything that stands out, I'm not going to put a lot of effort in. Emphasis into it. There's this little consolidation here, so let's see which way this thing breaks. I'm still leaning to the downside scenario, but there's certainly some things, and again, that's why I'm doing this video. There are some developments worth noting that says we're not out of the woods yet, and as I just said in the post that I put out, and I often say this, remember, support is support until and unless broken, and we have not broken the most important support levels that would most likely trigger the next impulsive wave of selling. So on here, remember, that's right about here, 73.30. There's a low, and of course that would be nail in the coffin, but there's been enough reactions there about 73.80 on NQ that needs to go, and here, so that's it. So until then, kind of noise within the range here, and again, not a lot that stands out to me right now on NQ. ES, same story, with that recent low right here, about 3 roughly equal lows, so about 28.17 needs to go, and until then it's still anybody's game. Of course, on the upside, the levels we're watching are the downtrend line and then the top of the trading range. So we're in what I call no man's land. No man's land is when you're smack in the middle of between support and resistance, and as we're in a trading range, anything can and will go. Okay, so let's look at the good, the bad, and the ugly. The ugly would be the longer term charts, where I think we're poised to go. We just need that push, that little nudge to get the markets down below these levels. And again, maybe I'm wrong, but I think that opens up an impulsive wave of selling, and I'm still leaning that way. But we're not out of the woods yet. You can. I always use analogy. What I post on the site are two type of trade ideas: trade setups, which are just a potential trade. For example, you can have a head and shoulders topping pattern that looks like this on a chart with a neckline right here, your right shoulder, your head, your neckline, and the trigger of that pattern is a break below the neckline. Right shoulder, left shoulder, head, right shoulder. That at this point, it's only a trade setup. At this point, it's an actionable trade. So that's the same story right here, right now. We need that next sell signal to get, break below those important support levels to get things going. So let's look at QQQ and SPY, and then I want to show you something on the small caps, and I want to show you some developments on the FAANG stocks that are right now giving me a little bit of pause here, because there are some potential bullish developments that could be the catalyst for a rally here to take us to the upside of that range, maybe even more, if they play out, that is. I'm going to start out here with small caps, because I haven't updated that recently. I did make mention in the trading room yesterday. When you look at IWM, it remains in a downtrend. You have both the downtrend line off the 2018 highs right there, and you also have at this point from right here, let me turn off all the lines, just make it very simple. You have a downtrend line from this point right here in early May with IWM, the small caps. Yesterday they made a new low, and so there's a a downtrend line from this time frame here, with the small caps making a series of as you can see, lower lows and lower highs, and of course from this point. Now this kind of muddles it up because we haven't taken out that low, so we can't really say there's a downtrend line off the highs here because we had a correction and we still yet to take out those lows. So anybody's game. However, let's look at a couple things that stand out to me on IWM right now, the small caps. Number one, pretty nice and clear positive divergence. This is what I like to see to go long, especially in a bull market. So I have to say that not only is it giving me pause, that I took some RTY this morning as a hedge, and I actually my active trading account have covered my NQ shorts, and took one little long small position there, just to see if these play out. If they don't, I'll flip right back to short. But this is a pretty powerful pattern. You can see here we had a downtrend line. We had a divergent low at this point right here. Right there, divergence, divergence, and that played out for this rally right here. And that was a pretty decent, tradable rally in IWM right there. Ran up, hit this resistance zone, came back down, and in doing so, we simply extended the divergence. We had negative divergence here, and we had it here as well. And so now we have an even larger divergent low. Not only is it there, that divergent low, I showed you on the daily chart, we made a new low, but it was marginal. Here's the previous low right back here, and you can see now we've recovered it. So if you want to look at it this way, that's a bear trap right there, or yeah, bear trap, because we had a breakdown to a new low. It wasn't very impulsive, but we did take out the previous low and we took out this low, but now we're back above it. So that's why, for the time being, and I may flip by the time I close this video out, but in my active trading account, I've gone long for the day based on this and the fact, like I said in the post this morning when I showed you the charts on let's go to those, QQQ and SPY. Like I say, support is support until unless broken. I can see us staring, on the edge of a cliff if we can break these levels, but support is support until unless broken, and we're there. We're hitting this triangle pattern right here. Let me get rid of that and make everything one color here. So you still have this symmetrical triangle pattern on QQQ. We hit the bottom of it today, and so far we bounced off it. Even if they take that out, they still have, as I showed you on the futures a minute ago, and you only see two reactions here. We had three on the futures. We have horizontal price support, and we still have the lows from the 5th. So there's quite a bit of support. And I just showed you the positive divergence on small caps, even though we don't have 60-minute divergences on QQQ and SPY. But again, SPY, just like QQQ, is also above support here. And then we have, here's what my concern is too right now. Let's go to, I want to show you a quick overview of the FAANG stocks. If you're new to the site, I use the acronym, I came up with this one a few years back, FAAMG, FAANG, because the old FAANG, FANG, to me, it made no sense, doesn't make any sense, because it's not the market. Netflix is way down the line as far as the weighting in the NASDAQ 100, the N in FAANG. Netflix is only a $129 billion company. Apple, Microsoft, Amazon, Alphabet, they're all around the $1 trillion mark, with Microsoft a trillion, Apple a trillion, Amazon close, and so forth and so on. So therefore, those are the ones I watch, and let's go over those real quick. And my point is that if you can tell where those 5 stocks are going, because they make up the bulk, they are a very large percentage of the returns in the NASDAQ 100. They're also the top weighted components in the S&P 500, not by as large a margin. And the Qs, they're grossly overweighted because of their market cap, and QQQ is not nearly as diversified. There's only 100 stocks in there. So let's run through those real quick, because where the FANGs go, QQQ goes. All right, so here's Microsoft, trying to test this trend line. We're not below it. We've had a few pops below it. There, that should be just a line tool. But we also have support right here, quite a bit of support. In other words, Microsoft is one of the strongest, has been for a while. Here's a breakout to highs, new highs that still has held so far, and more so is what I see on the 60-minute charts. Here's a 60-minute chart of Microsoft. And let's go right here and show you what stands out. I know you see a lot of lines, but I'm just coloring the salient lines here. So like QQQ, it's simply in a symmetrical triangle pattern. It could break either way. And it's been whippy. There's been a few little false signals, but nothing impulsive. That's why I always talk about seeing an impulsive breakdown. So Microsoft essentially is at or just above support, just like SPY and QQQ, right at or just above. And although I favor a breakdown, it's not, as I said in the post this morning, it's just not objective. If you haven't shorted yet or you want to add, it's contrary to trading to short on support. You do one of two things when a stock or a security or an index falls to support. You either go long on the bounce off support, or you wait to see that support break for a sell signal. and then you go short. We can go either way here. By the time I'm done with this video, we could break down or we can rally off these lines, but that's it. So Microsoft, bottom line, at support right now, and that is again the world's largest company, and it's been the strongest by far in the of the top components of QQQ lately. Next up is Apple. I'm just going through these in order of market cap. Apple, kind of a mixed bag here on the 60-minute chart. I'm not going to spend too much time because I don't want to, I can't take too much from this. Here's a trend line. It's a minor trend line, not super well defined, but Apple broke down, back tested, and still below it, but it's also above this support right there. So, you can see all types of trend lines. There's another one. Breakdown, back test, failed. So when it broke the uppermost trend line, it's been set up in this channel here and broke down recently. No divergence. You might say, oh, well, Randy, is that positive divergence? No, I get this a lot. The indicators are making higher lows, but the prices are as well. You need to have prices making lower lows. If Apple was down here, that would be positive divergence. So just doesn't mean much. It's not a super bearish chart, not a super bullish chart. Just let's move on from that. I want to show you a few that do stand out to me and that again are really, I think, worth watching. Amazon. This is positive divergence. This is what I look for often on 60-minute charts. For swing trading, I like the 60-minute time frame to see positive divergence or negative divergence. Right here, you had a small little negative divergence, and it led to a much larger divergent high right there. You had a very clean up trend line. On a scale of 1 to 10, that's close to a 10 for a short trade setup. That's a negative divergence. Uptrend line gives you a rising wedge, a breakdown, and boom, that was the catalyst for this correction. But like the stock market recently, we had an initial leg down, and then we've been trading sideways for over 3 weeks now. And so here it is. This is going to go one of two ways. I mean, obviously, you're either going to break to the upside of the pattern or you're going to break to the downside. If the break to the downside, it's pretty darn bearish. And I have to tell you, I'm still leaning that way, but you have to respect these divergences as long as they're intact because they could play out, move up to, and possibly then a breakout of the range. So that's what you'd want to look for on Amazon. You want to see, first of all, do these divergences hold? And do they start to play out in the form of a correction? And if so, which way does this trading range on Amazon break? It's not by even close to being a coincidence that Amazon's been in trading range since the beginning of August, just like this market. Again, these are the market leading stocks. They are the market. The QQQ is mostly a reflection of these 5 or so. I'm going to go over 6 stocks here today. So there's one with bullish divergence, and what you want to see for the bearish case, you want to see these divergences fail to play out, meaning Amazon breaks down. Keep in mind, if it breaks down and starts to move lower, it's going to have that potential divergence for a while. I say potential because the PPO will be heading down. We'll need a bullish cross again to confirm it. But these divergence lines could move down, let's say something like this, for example. As long as we don't take out this previous low right here, positive divergence could be anywhere from here all the way down to flatline divergence with equal or higher lows on the indicators with prices making a lower low. So this scenario, let's say a breakdown, it would certainly bring in some shorts. There's no way that a lot of people don't see that support level on Amazon. So if that breaks, you should have some stops hit here on longs that stop out or throw away their shares, shorts piling. And if it reverses, that would be a failed breakout or a fake down, I call it, false breakdown, potential bear trap. And then the divergences, if they're still intact, could be the catalyst for a much larger rally. So we need to watch this. And now on the flip side, fewer things in trading are more bearish than either a failed breakout or a pretty well-watched pattern, bullish pattern that fails to play out. What do I mean by that? I gave you a head and shoulders example a minute ago. If you have here, let me grab a line tool here. If you have a head and shoulders pattern, let's say on a stock or an index like this, and it looks just perfect. Everybody's talking about it. Everybody's watching it. And instead of it breaking to the downside like it appears it will, it reverses here and goes up. I remember we had one of these back, a big one. Everybody was talking about it. Might have been 2010, 2011, some point like that. And the market rocketed after. It failed to even play out. If it broke down, it was just brief. I don't even know if it gave us a false breakdown. But so where I'm going with this is, here's a bullish setup, but if it fails to materialize, if Amazon breaks down and just keeps going and burns through these divergences, that's going to be pretty bearish. And that's also probably going to push us down below those support levels on SPY and QQQ, because this is a big weighted component. So there's one to watch. And like I said, right now it's giving me pause, and of course I have pause because we haven't taken out those lows yet on the market, and we need to get out of this trading range before anything big is going to happen. The next one up is Alphabet. We'll just look at Class A shares here. Like I'm saying, mixed bag is a key word, because on Apple I showed you a breakdown. I'm showing you some of these stocks haven't yet, like Amazon, haven't yet broken support. This one, if you look at this uptrend line, which is well defined, we did break it, and it was impulsive, and we came in and back tested. However, you also have price support. See right here, good support. These aren't randomly placed lines. You can go back in time. You see reaction highs, reaction highs, or reactions from below on that line. A brief pop, but then you can see Alphabet respected that level, respected it again. Brief pop again. Maybe a short, stop raid. That's what this market's been plagued with. So we're kind of, this one's sandwiched between support and resistance right now. And it all comes down to a common theme here. We go much lower, we're going to break some supports on some of these key stocks. But yet if we go a lot higher, we could also break some resistance levels that I've talked about, and the downtrend lines off the highs. So if there's one takeaway from this video, I know you probably are head spinning right now, is be flexible. Don't be married to any one thing. I'll tell you what I think is going to happen, but the problem with a big move, everybody's hyper focused on the market right now, whether you're a bull, a bear, long, short, agnostic, you have no opinion, but you're interested. It's hard to argue that the market's not at a pretty important battleground right now between bulls or bears. It's probably going to break one way or the other. I still think it breaks to the downside, but if it breaks to the upside, some powerful trading ranges here. Remember, this is a coiled spring in the market, and all these stocks, all this sideways trading right here in the last 3+ weeks now, it's energy building. And why that's possible, like I said, there's quite a bit of resistance overhead. I favor a break to the downside. Anything can happen, and I just again wanted to point these key levels out, because if you replicate these charts and watch all of these stocks, it may give you clues. The more of these that break down, the more of these market-leading FAANG stocks that break down, below, gives you an additional check mark for the bearish case. And obviously, the more that hold support and/or break up, then that's a check mark for the bullish case. And might tell you to, hey, maybe start covering shorts, or make sure you have stops in place if you start seeing everything break into the upside, especially those downtrend lines that I've talked about in the top of the recent trading ranges. I'll have to here, I could take that line a little higher, and that would tell you that's the top of Alphabet's trading range, about 1200, a little north of 1200. Okay, so that one's there. Here's another one. This is what, second or third one with a bullish chart pattern. Now, in a vacuum, or let's say, in a healthy bull market, I'd be all over this like white on rice. This would be an official trade setup, or maybe be going long this one personally if it broke out. Remember, guys, a trade setup, just like a lot of things I went through in the videotape with commodities, is not the same as an actionable trade idea. This is a trade setup. A setup must trigger an entry, and this is a bullish falling wedge pattern. Nice, clean, clear, positive divergence, 60-minute chart. Also a stock that's fallen to support. You can see a big gap back here, some reactions, and that can go either way. However, if it goes to the downside, it's a bullish pattern that failed to materialize, and that's pretty bearish. In a bull market, I'll say this, throughout the last 10 years, I have not seen very many clean bullish setups that didn't play out, even during the corrections. And this is usually what I look for during corrections, the 60-minute divergences, to then cover my shorts and go long. And so if all of these fail, that's going to be pretty darn bearish if these break down. And Now that's the bullish setup as I showed you there. You know, the divergences, the downtrend line, potential breakout if it does come. But what I can tell you that I see that at the time here is also giving me a little pause on the chart, at least for the bullish scenario, is that zero line does a great job. It's such a simple indicator. It doesn't work for every stock or every index, but I look at the zero line on the PPO, and when the PPO line, meaning the blue line here, is above it, the trend is bullish. So I'm going to box it in here. And I use that because that's the last of the two to cross, right? Oh, I'm sorry. I did that wrong, guys. I use the 9 EMA as the trigger for that trend indicator. The 9 EMA is the white dotted line, and that's the last of the two to cross. I use that because it's a filter. It helps to filter out whipsaw signals because it's the slower of the two lines. It's the moving average for this line. And so when that white line is above, as it was all the way here, and it back tested, made a nice back test, it told you throughout here the trend was, well, that's a mess. You can see from that point it crossed to here. From right here, there's the bullish cross, to right here, the bearish cross. It said trend is bullish, and it caught most of that trend. Before that, it said the trend was bearish, coming in from the left of the chart to down here to the crossover. And from this point, we cross and we remain below that. We keep bouncing and failing every time that signal line comes in and back tests, and we're testing it again. That's why I have the arrow there. So glass half empty, glass half full. But I need to point these things out because should it break out, we'd have, you know, not only a buy signal on the breakout in price, and by the way, don't chase that breakout if you don't see confirmation on those other FAANG stocks as well as QQQ SPY. Why? Because if you break out in Facebook and then QQQ and the S&P 500, they go lower, they break those major supports, I promise you Facebook will get dragged down with the market if we open up another wave of selling. There's no way Facebook is going to rally 5-10% with the market dropping 5-10%. It simply can't, because it is a top weighted component and it will come under forced selling. Is it possible? Sure, technically. Is it probable? No, absolutely not. The probability is if the market drops another 5-10+%, no matter how bullish the technicals are or the fundamentals on Facebook, forced selling is going to bring it down with the rest of the lot. So that's that. Oh, and if you do get the breakout, again, just talking about this stock alone, and I guess my point is don't trade it in a vacuum. Trade it by looking and keeping an eye on what the index is and the other FAANG stocks are doing. But if you did get the breakout, you'd also look for a definitive bullish cross of that the signal line back above the zero line along with the breakout to help confirm that the trend may have flipped over to bullish there. So that's Facebook, and just only one more I want to show. Sometimes I call them the FAANGs or the FAAMG stocks. If I add an I to the end of FAAMG, that would give me Intel as well. And let's see. And this is Intel. Well, one of the top components, I believe it's number 6 or 7, world's largest semiconductor stock. Certainly, bellwether of tech here, and obviously key to the semiconductor sector. Another stock with positive divergence on the 60-minute time frame. So again, something to watch. Now remember, these divergences don't always play out. We had a divergent high right here. I mean, we were long or bullish on Intel back then. I had listed at the lows here back in that correction, gave price targets on this trade all the way up to here, this level. That was the original T3, and so we hit it. So there were divergences, but not divergences that they were worth noting, but they didn't play out. The trend was bullish, and what happened is, we had a little rising wedge. It had a breakdown, but it was a fake down. So what happened? The stock kept going up from there. Here's a consolidation range. Remember, the consolidations, work like coiled springs, building energy, and then boom, it broke to the upside, and that was a catalyst for this nice leg up, that final leg up. But there it is. So we have divergence now. And again, the takeaway is if the markets defend and hold these support levels that they're been flirting with now for weeks, And some of these divergences start to play out, and you see these trend indicators like the PPO signal line flip over. You see prices break up. This trend line's not very well developed, but it's worth noting up right here. So that would be certainly a resistance level to watch if Intel starts to rally. And you also have, like everything else, like the market, a recent trading range that if you pop above. So really this is like, let's say, the sweet spot for a breakout in Intel. Now, is it a breakout that I would put it on as an official trade? Probably not. And I can almost say certainly no. Because just like the broad market, there's a lot of technical damage on the longer term charts. And there's also some pretty significant resistance levels just above on both the stock market and many of these stocks. So again, it's like I said, I want to point these out because it's certainly they could play out, and maybe the catalyst will be technical as well as something that comes out of Washington. But if they fail and we start going lower, I still think there's, the markets are sitting on the verge of a, technical cliff, if you will. Again, go out to the daily charts, and let's not lose track of the big picture, and that is those recent trading ranges. And anything in between is, I don't want to call it noise. There's some levels to watch, but this is really what we need to break, those recent lows to get that move down to this next target here on QQQ, about the 170 level. So let's see where it goes. Let me get this video out to you guys, and we'll see if those bullish chart patterns on those stocks that I just showed you start to pan out. And then if they don't, again, you have to adjust quickly, especially if you're positioned heavily long or short within this trading range. Yeah, you may need to make some adjustments. And this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.